So JP Morgan just launched a stable coin. Right now it's for institutional clients, but they launched it on BASE, guys. This is crazy, okay? Let's call it JPMD. It's a USD denominated deposit token issued by JP Morgan's blockchain unit, and it's representing bank deposit liabilities. Now, guys, before I even go on, you need to learn some history about JP Morgan. So JP Morgan is named after a man. His name was James Pierpont Morgan, and he actually helped create the Federal Reserve. He was the Federal Reserve before the Federal Reserve was created. Okay, so banks were failing. The country was literally about to go to shit. And they called him and was like, hey, can you bail us out? Because he was super rich. He's like, oh, he was getting older. It's a really good book called The Creature from Jekyll Island. And if you guys go to the Know It Owls YouTube channel, type in Creature from Jekyll Island, Know It Owls. We did an in-depth book review on it. That book explains the history of the Federal Reserve, how it was created, why it was created. And all. It's a pretty dark book. It's pretty scary, but hey, the truth is the truth. JP Morgan was getting old. He wanted to retire and like just sail off on his boat. So he's like, you motherfuckers is letting this country fail. Let me create the Federal Reserve for you. And it's basically, it was created to be a lender of last resort to bail out banks so that basically America couldn't fail, right? The Federal Reserve was created in 1913. And before he created it, he actually did bail out these banks and essentially save the United States. Now, why would he do this? Why wouldn't he just keep his own money? Like, oh, I'm good. Because he wanted to have favors, right? He wanted to get things passed for him. And now if you just look at the first thing that I just read, there's something that passed called the Genius Act. And the Genius Act allows banks to issue their own stable coins as long as they're backed by US treasuries. Now, if you look at this, JPMD is a US denominated stablecoin. It's not backed by US Treasury. It's backed by bank deposit liability. So they're already circumventing it. Like, is that proof or not? Like they don't have to have their stablecoin backed by US Treasuries because they're the largest banks. Like they're the largest commercial banks. They're the bank of all banks right under the central bank, right? They're in cahoots with the central bank. So that right there is something important to keep in mind. Again, this is live for institutional clients on BASE. It's not like a regular crypto stablecoin. It's fully backed by bank deposits and designed for 24/7 settlement. And it's on the BASE network, guys. So boom, how does this work? So you have on-ramps. So a corporate client, they deposit United States dollars at JP Morgan. The bank issues JPMD on BASE one-to-one against a deposit. And again, how stablecoins work this is another reason why I think we're going to go to a crazy bull market. Stable coins is going to cause major inflation, guys, major inflation. If you look back to any recession or depression that we've ever had in the United States, it's because the Federal Reserve made it easy for people to borrow money in some sector of the economy. If you go back to the Great Depression, they made it really easy for people to borrow money so that they could finance appliances and cars. If we go back to the 2008 financial crisis, they made it really easy to borrow money to get a mortgage. There's a famous movie called The Big Short where Steve Carell was knocking on people's doors, like trying to figure out like what was going on. And he asked for someone's name. And the guy's like, why are you asking for my neighbor's dog's name? Long story short, they made it so easy to borrow money that you could take out a mortgage in your dog's name. An application where you have to put your social security number, address, and all this sensitive data, you can get it in your dog's name. Like, think about how insane that is. And then when we moved on to the pandemic, they made it easy for corporations to borrow money through the PPP loans and the EIDL loans. Like, we all knew a person who never had a business, but they somehow got that PPP loan. So now it's stable coins. Like, guys, this is how stable coins work. When you go on Coinbase and you purchase USDC, yes, it has to be backed with US Treasury. So you give them your dollar, right? Your dollar still exists. And then they give you USDC. So $1 just created $2 out of thin air, right? We have interest rates dropping. Liquidity needs to find a home. So a lot of that money is going to find its way into crypto. And now JP Morgan's launching their own stable coin as well. And they have billions and trillions of dollars. Okay. So now going back to this, you have these on-chain transfers. So these tokens move on the BASE network and enabling near instant settlement on BASE. Clients can redeem JPMD for US dollars at JP Morgan. And then because it's a bank deposit token, it may carry interest and it's distinct from a traditional stablecoin. So this could be like the first yield bearing stablecoin. There is no info on that just yet. This is brand new. So now Why do you think they chose Base, guys? Well, if you think about it, Coinbase is America's first public company, crypto public company, and then Circle's number 2, and Coinbase incubated Circle, basically. Coinbase already has major trust. They are the main custodian for the Bitcoin and Ethereum ETFs, including BlackRock's. BlackRock trusts Coinbase with their money. Like back in the day, people used to say, oh, you'll never get fired from buying IBM. Eventually, Coinbase is becoming that kind of company in crypto. IBM was that for tech. And JP Morgan also said that they're not going to issue this token on any layer 1. So they're issuing this on Base, and they're sticking with Base. So by issuing this on Base, JP Morgan gives institutional money access to public blockchain rails. So if we go to DeFi Llama and we look at Base's total TVL, guys, JP Morgan just launched a coin on here, and the TVL is only $4.1 billion. They have institutional clients, which just one client, I'm sure, with that amount of money. And if it's a yield bearing stablecoin and we have this whole debasement trade and like they're printing money, people are going to want to get some good yield. So it would be very smart of JP Morgan to launch a yield bearing stablecoin. Another thing, and then we're going to go on to the positive implications for DeFi on Base, because this is the Base show. So first, like if institutional tokens like JPMD go on Base, well, it is. Base becomes a hub for real world assets plus institutional flows, not just retail DeFi. If you guys are bullish on RWA and you want to keep a tab on what's going on, this is the best website to do so. And you can basically see all of the RWA assets on chains. The largest one is private credit. So you have companies like maplefinance and Goldfinch, etc. US Treasury is the second largest. So it's $8.4 billion in US Treasuries tokenized on chain, commodities, 2.9 billion, alternative 2.9. And you have all these other things here. So if people are looking at JP Morgan to basically have their stablecoin on Base, and they know that's where all the liquidity is going to be for institutional investors coming on chain, where do you think all of these assets that are tokenized are going to go? They're going to, it's just like when people start a hedge fund or some kind of fund, they're either going to go to New York or go to San Francisco, because that's where all the deal flow is. This is deal flow, and the capital is JP Morgan launching on Base. So we're going to see a lot of tokenized assets coming onto Base. I guarantee it, because that's where the money is. And JP Morgan already said that they're not going to another layer 1. Like they're sticking with Base. So now positive implications for DeFi on Base. So liquidity inflows and settlement rails. So institutional deposits via JPMD could mean more capital flowing into the Base ecosystem. That's obvious. That's going to translate to Base making more fees. Right? Who knows what implications this is going to have on the Base token, right? Hopefully these institutional clients don't suck up all the airdrops. So hopefully they drop that airdrop before that happens, but I'm sure they'll make it worth it for the people who have been using it. Then you have tokenized deposits being integrated with DeFi. So JPMD could be used in lending, collateral, trading, which could drive DeFi growth. So imagine getting into a liquidity pool. And again, they have to open this up for retail, and I think eventually they will, right? Getting into a liquidity pool with JPMD and USDC or JPMD and ETH, right? If this is what the stablecoin that institutional investors are going to be using, it's going to be a lot of buying. Like if they're buying ETH, they're going to be buying ETH with JPMD if that's how they're coming on chain. So JPMD liquidity pools are going to be really good when and if they allow it to be used by retail. So I'm just giving you guys a possibility. And then obviously credibility. Like we kind of just
quick question on the JPMD.
Mm-hmm.
Have they released like when it's going to go live? Because I remember like this news hitting, the timelines a few days ago. Like, this is a huge, like institutional adoption. This is what it looks like. Incredible. But like for the actual token itself, have they released like when it's going to go live?
Let me ask ChatGPT. That's a good question, JPMD. Now a quick word from our sponsors. Fireside is going to be fucking Clubhouse on this. No.
Also, Gogi's a man in the know. He says they surely will wait for the Clarity Act to pass.
Yeah, I wouldn't be surprised.
That makes sense.
Here's another thing, guys. When people launch new products, especially things like this, they like to launch them in the bull market when they have the most eyes. Just like NASCAR, people are building their car in the garage, and then once they're ready for the race, then they go out and show it. The bull market is the race. So all these things being launched just gives me confidence that we have a bull market ahead of us. Like, for example, Aave, they've been working with regulators for years. Did you know they just launched their mobile application? Why would they launch their mobile application right now? Aave is the #1 protocol in all of DeFi in terms of TVL. They got billions of dollars. They know something we don't. So anyway, so it says here that according to several reports, it went live for institutional clients on Base Network around November 12th through 13th. So it says that it says it already went live. And this is from Ledger Insights on November 11th. So I don't know if it actually did.
But is that the actual JPM? Because, like, I mean, you see these pump fun copycats.
Yeah,
Like,
that's
as
true.
soon as the news was announced, I saw a dozen tickers for it.
Yeah, honestly, I'm not sure, man.
But also, I feel like you know, it wouldn't be out of character if they didn't do a fair launch. They just retain supply. They don't want retail investors really. They just want retail. They want crypto rails. They want people to use it. Gogi coming in hot again with the assist. Yeah,
Yeah.
just testing the JP stable for institutional retail needs, regulation, clarity.
I wouldn't be surprised. Yeah, I mean, to be honest, guys, we can be looking at this 10 years from now. This could fuck around and be the CBDC. It's JP Morgan, bro. They created the Federal Reserve. People don't understand. This is actually big wild. Last thing here, let's go over the risks. We always got to cover the risk here. So obviously it's for institutions right now. There's centralization risk. So because it's bank issued, JP Morgan controls the issuance, the redemption, and is not fully permissionless. And I'm sure they can blacklist you and like do probably whatever they want. I'm sure, right? We all know what kind of guy Jamie Dimon is. He likes control. So another risk is regulatory and interoperability constraints. So for now, flows are internal to JP Morgan clients, full cross. I don't know if this thing is going to be able to be bridged. It sounds like it's only going to work inside of the Base network. Dude, JP Morgan is basically forcing people to use Base, man. That's crazy. Do you realize how crazy that is, bro? Like, this is the first stable coin that they're saying, like, oh, we're only going to work on one chain. Like, that's actually wild, man.
Are there not ways to just wrap the token for people that want to trade it on other chains?
I mean, knowing JP Morgan, they're probably not going to allow that to happen. I mean, I don't know if you can build something out to where it can be wrap resistant. Okay, actually they can. By being able to blacklist someone, basically allow them to not use it for certain things. Like, oh, if you use it on Tornado Cash, it's blacklisted. They put like a stamp on it or something. They could do something to her like, hey, if you put our tokens in a wrapper, you're going to lose it. So they can do that. Will they? I'm not sure, but they definitely can. Moral of the story, guys, JP Morgan, and you got to remember, JP Morgan and Microsoft is a part of the Enterprise Ethereum Alliance. Base is on Ethereum. So they're going to make sure that Ethereum and Base does well. Like, they're the custodian of the ETFs. They're one of the largest nodes for ETH 2.0 staking. Like, Base is going to be the place to be, man.